Yeah, so guys, we already did the live section earlier this morning, but for some reasons was, I was too very engaged in sharing the analysis and all of that until I forgot recording the section. So this is just to, capture the whole conversation we had in the morning so it can be uploaded on YouTube. Um, I'm just beginning through the charts now. The purpose of this is so that we have the recordings accordingly because we don't want to miss any price projection and every episode we get to share on the Black Wallstreet Call. So let me just go straight to the screen. Um, yeah, so this is the screen right about now. Wait a second. So quick one on the dollar. We first of all have to start with the dollar analysis. So this is just the dollar analysis. We had remember some months back, go back to the previous episode, right? Go back to the previous episode, you second me request this. All right, cool. So on the previous episode, I stated that dollar has been trending for some time now. You can see this massive trending bullish price movement. But towards the Q4 of 2022, which was between September till December, there was a pullback, and this pullback was to a significant area of discounts, which was somewhere around here. I don't want to point it out, so the charts don't too dirty, but this is the area. This is why this guy, held somewhere around here. I think on the third episode, I made mention that because this dollar closed at the bullish engulfing is actually a bullish reversal pattern, indicating that the price is about to go in the projected direction. So this bullish engulfing candlestick gave us this confirmation that this guy will be going bullish. But we have to go on the weekly time frame to see if there was a break of structure. And yeah, there was a break of structure here, right? Let me identify that. Yeah, there was a break of structure here. So that break of structure gave us that confidence that, right, this guy is about to continue going bullish. But first of all, it cannot just go directionally like that. It has to pull back to the best price, which is a discount somewhere around here. Now, this was a projection we had, and dollar pulled back to this other block. You can see that it held on this other block. You can see it just tapped into this other block. And notice again that last week, let me zoom in. Notice again that while on this, let me take this off. While on this count area, it closed as a bullish engulfing. This bullish engulfing was what gave us the confidence that this guy is holding at this discount and that it's going to go bullish, right? So going on the daily time frame, the daily time frame will give us a clear entry. Now this is the daily time frame. Now on the daily time frame, notice that there is a minor break of structure somewhere around here, right? But we have to wait for it to pull back to a discount again. Now, this is a minor discount in the bigger discounts, a minor discount in the major discount. That on the weekly time frame was a major discount, and the 1 year on the daily time frame is a minor discount. Hence why we are expecting a pullback to this area. So once we see a pullback to this area, we should expect to buy the dollar. So buying the dollar will be buying the dollar will be that there will be an opposite price reaction on pairs like Euro USD because this pairs like these are inversely correlated, right, to dollar. So a quick one, let's go to Euro USD to see what Euro USD have for us. So on the Euro USD now going on the monthly, quick one on the monthly time frame. Don't want to spend much time here because I had the section already, and I'm very much tired. Then I just, anything for you guys. So same thing on the Euro USD. Euro USD has been bearish decline. However, Q4 of 2022 led to this pullback, which held at this premium or the supply area. And on that supply area, for it to tell us that it's going to respect that supply area, we saw that it closed as a rejection candle on the monthly time frame, followed by a bearish engulfing. This bearish engulfing gave us that confirmation that this guy is going to respect this supply area, right? That's the first criteria. Now, the second one, going on the weekly time frame, we noticed that there was a break of structure. Now, this was a break of structure. It broke this structure, and this break of structure gave us that additional confidence that this guy is about to collapse. However, we cannot just start selling from here because this would not be the best price. So getting the best price will mean that we have to wait for a pullback to an area of supply. So this was a weekly supply area that was identified here. This other block gives us that supply area, or what ICT calls the premium. All right, this is what ICT calls the premium. However, this is still supply. All right, so we also said that if this guy pulls back to the supply area, it will form a chart pattern called an head and shoulder. And this is the left shoulder and this is the right shoulder. So now this guy pulling back to this bearish, this guy pulling back to this supply forms the head and shoulder, form the right shoulder. And for us to know if it will hold here, if the supply will hold here, we had to wait for a bearish reversal candlestick, which is the bearish engulfing we are seeing here, right? So this is a bearish engulfing showing us that this guy is about to respect the supply area. And also there is another confluence that gave us that massive that backed our analysis that indeed these guys are going to collapse. Now let's use the fib because this is what I call an OT pattern. Go back to a premium. Now notice what is happening here. This price point is reacting between the 0.618 area and the 0.70 fib area. This is about three confluence just around this supply area. First of all, the supply area. Secondly, the right shoulder. Third, the fib area overlapping with all of these areas. And the last one is bearish engulfing, which is a bearish reversal pattern. Now, since all of those things have been identified, we go to the daily time frame to seek for entry. On the daily time frame, we also notice that there is a minor break of structure, and for us to sell this collapse, we have to wait for a pullback to this supply, the minor supply here. So a pullback to this minor supply will give us the best price to sell Euro USD. Hence why this is indicating that we have to first of all wait for a bullish, pullback to this premium before we short. So let's calculate how many pips we have right about here. Take out my tool. From here, which is the entry point, we are going to be shorting this asset to the first level target. This low serves as the first level target. So it's a point of interest we have to put our focus on, even if our overall target is somewhere around here. But first of all, we have to consider this because we don't know what the market does. We don't own the monopoly to the market. What we just do is to see what the market is doing and react accordingly. So this is the first level target, which is this low. Overall target, and of course, it's about 500 pips here. Then the overall target is about 800, it's about 900 pips. Second level target is about 900 pips. And guys, you have to understand that when the market is about to collapse like this, it will not just move in a straight direction like this. The movement would be more of an oscillation. Give me a second, let me take it to so I tell you guys what I mean. So the movement will likely be something like this, right? Something like this. Okay, something like this. So the movement would likely be like this oscillation. However, we don't know if it will be about how many pullbacks, right? We are not sure of the amount of pullbacks, but we know that it will be moving in oscillation. It moves lower, low, lower, low, lower, low, and all of that stuff. So we can end up having about 3 additional entry points. Apart from the one we have here, we can add another position here if we get the pullback, and we can also add another position here if we get a pullback. So in a price projection of like 900 pips, we can end up making 1,500 pips over 2,000 pips. That is how the market moves. So don't expect the market to just collapse in a straight direction. It's not possible for you to see something like this. No, it's not possible. So this is I just needed to clarify that stuff quickly. I'm sure you guys know this already, but I just needed to point that out. So that's how the market moves. So Euro USD is about to give over 900 pips for the first level target. I'm sure this is the first level target. We also have other target, but then when the market gets here, we have to reanalyze and see how the market behaves at this level. If it will still continue bearish, or if we get pull back or any stuff like that. So that's it for Euro USD. Quick one. Let's go to pound dollar, GBP USD. The same thing across board on GBP USD. Still the same thing. Still the same thing. I don't need to go on the monthly time frame to do the overall analysis. If you missed the episode before this, please go back to YouTube. It's posted there. Quick one. The dollar pound, the pound dollar rather, is still in a bearish decline. However, we said that since this guy has a broken structure here, we have to wait for a pullback to a significant area of supply or premium, which is here. You can see how the market pull back to this premium, and also the market pulling back to this premium would mean that it is forming the right shoulder. Now this is the left shoulder, right shoulder. So if we take our fib tool from the high here to the low here, this guy is reacting from the 61 level, the 61 fib level. So that's about how many confluence? Right shoulder number one, fib confluence number two, third one the premium here or the supply here. So it's about, and also the bearish engulfing here, the bearish engulfing here. So it's about four confluence. It's about four confluences here. So going to the daily time frame, let's go to the daily time frame to see how we can project our entry. The daily time frame, however, this GBP USD is not looking that clear as that of Euro USD, but then we still have to make our projection. So this is the bearish order block, right? And we expect this guy to pull back into this bearish order block before they collapse. So this is what I mean. This is what I mean. Pull back to this premium and collapse. So that's it for GBP USD. That's it for GBP USD. And also have it at the back of your mind that we are already in December. This is like the second week of December, and liquidity is already drying up in the market. So be careful when you're trading. Don't throw lot sizes around. Don't aim to over leverage your accounts. Because banks are going on holidays, and when banks are going on liquidity, there's no liquidity. Liquidity is money. When there's no money to facilitate transactions, then the market will likely be quiet. So expect quiet price movement from this period and up to probably the second week of January. So less liquidity will be seen in the marketplace during those times. So we have this at the back of your mind. However, you can also take part in whatsoever is unfolding in the markets. So that's just a projection for GBP USD. Let's check Crude. Let's check gold first. Gold is looking juicy. Now, gold is looking juicy, but gold is currently in an indecision mode. I'll explain this further. Let me go to the monthly time frame so I get to explain what I mean by that. Gold has a sweet opportunity, but then what the guy is doing currently is what I don't understand. He's looking for someone's money to eat. And you guys should be careful. Don't allow gold to eat your money. When gold wants to eat your money, the guy will pity you. Can pity people though. So be very careful when you're trading gold, especially during this period. Now, this is what I mean. prior to COVID period, right, gold was in a massive bullish rally. And I think it was this same time that gold hit $2,000 per ounce. I think somewhere around it. Yeah, $2,000 per ounce was hit on gold during the COVID period 2020. Right from then, gold was trading in a consolidation. And this is like a range. For those of you who don't know, or who think that gold has been, this is a range. But this is a range, guys. We feel this is so easy. It's not what I want. I just feel that. Yes. Now, this is a range, but this range is on the monthly time frame. So, in between this rally, collapse are massive trading opportunities. I think this particular collapse still within this range was about 3,000 pips. So we cannot just leave that on the table because we feel that this guy has been ranking. And if this was to happen on the 15 minutes time frame, then it's very advisable we ignore it. Or it will happen on time frames like 1 hour, even 4 hours time frame. We can ignore trades like this. But this is the monthly time frame, guys. In between these ranging market are massive trading opportunities. And we got this collapse where this collapse last year where we made about 3,000 pips. So under this 3,000 pips collapse, I think I was able to extract about 6,000 pips because I got about 3 additional entry points. And you can also see the rally and all of that. So the analysis we had, I think Q3 of this year was that this guy was forming a triple top, right? Now, what gave us this confidence that we are supposed to short gold was that this, after the triple top was confirmed, first 1 year close as a rejection candle, the follow-up candle closed as a bearish engulfing. So when we saw this bearish engulfing, it gave us this confidence that gold was about to collapse. Going to the weekly time frame, still within that period, going to the weekly time frame, this guy broke structure. Gold broke structure somewhere around here. There was massive break of structure here. So this gave us that confidence that gold was still going to collapse. And we got our entry here. We got the first entry somewhere around here. I sold gold somewhere here. I sold another one here. So I got about 2 entry points. And between here and here, between this point and this price point where gold collapsed to, we made about 1,500 pips or 1,700 pips, if I'm not mistaken, from 2 entry points. That was to show you that there was a lot of things unfolding on gold. Now let's go back to the monthly time frame. Let me explain something before I end this section. Now on the monthly time frame, right? On the monthly time frame, you can see that after gold hits that price, that our target, because we had a first level target there. After gold hits that level target, see what happened. Bah, bullish involving massive bullish rally. The follow-up candle was a massive bullish rally. And also it even broke this all-time high, which was about $2,000 per ounce. It broke this $2,000 level, broke it, and went to about $2,100. It was trading about $2,142 per ounce, or $2,150 per ounce. That was a lot of massive rally. And also for the fact that these are all highs. First one here, the second one here, this is an area, this is a buy side liquidity. There was liquidity resting here at the institutional level. There's nothing you can tell me. There was liquidity resting on this level. And this candle hit all those, grab all those stop losses. Right? Now look at what is happening here. It's looking as if it wants to go down, but we are not sure. Hence why we can't participate in this kind of trading opportunity, especially in a time like this. So this is more like a manipulation move, and hence you should be staying out of the markets periods like this and times like this because you don't know what the market is going to do. So quick one, just going forward, right? If this guy closes, my trading strategy is more rule based. I have certain rules laid aside that needs to be met if I must take any trade. Now, the rule here I have is that if this guy closes on the bearish engulfing, then I'll be considering a bearish flow. If this guy closes on the bearish engulfing, then I'll be looking short gold. But I have to see a break of structure on the weekly time frame in addition to this bearish engulfing. So the first criteria is the bearish engulfing. The second one is that I must see a break of structure on the weekly time frame, telling me yes that Edwin, this guy, I'm about to collapse. Now, once I see those two things, I'll now go on the smaller time frame, daily time frame, 4 hours time frame to for short opportunities. But if I don't see these two things playing out, then I'm not going to be on this trade because it's possible that this guy is going to collapse because of course there's a sell side liquidity. This blue dash line shows areas of liquidity. So this guy can come here to grab the sell side liquidity, fuel this imbalance, and up to this discounts or this demand zone. So it's possible, and it's also possible for this guy to keep going bullish. So anything is possible here. That's why I said that we are in an indecision mode on oil, on gold. So we are not looking to take any trading opportunities on gold. Give me a second. What's now? Don't go off. Right, but so that's it for gold, right? So just watch out for gold, and also let's check crude oil. That's the last asset I'll be looking at. Now, crude oil, I keep saying that in fact, I still have this call that I still see crude oil hitting $100 per barrel. That's my first level target of oil. My second level target on crude oil is $120 per barrel. So I'm looking forward to crude oil hitting $100 per barrel and also $120 per barrel. If it sustains above this blue area, if it sustains above this demand zone, there's a demand zone. I don't want to make it scatter between this black area and this blue area lies my demand zone. So as long as crude oil stays above this demand zone, I still anticipate crude oil to hit $100 per barrel. Of course, this is a break of structure. It shows that this guy has interest going up. So if it closes above this discounts and I see a bullish engulfing still within this discount, scale down to a weekly time frame, I see a break of structure again on the weekly time frame. I'm going to go long on oil. All right. But if oil closes below this discounts, if oil closes below this discount or this demand zone, which is identified with this line, then I'll be looking for short opportunities. But let's wait to see what the market has in store for us because it is currently in an indecision mode. Crude oil and gold is currently in an indecision technically. Now, this is for the technical analysis. All right. I'll move into the macroeconomic data where we have all of this. But technically, these guys are commodities like oil and crude oil and gold are currently on their indecision. Are currently on indecision level. So let the market just decide and tells us where it wants to go. Of course, we see price patterns. The market will give us, surely the market will give us clue as to where it wants to go. And of course, we'll capitalize on that. So that's it for all of this. So quick one, let me now let me share the macroeconomic data for the week. You can see this is macroeconomic data for the week, and it is from December 11 to December 15. So by December 15, this data is no longer valid. So on the first asset here we have is that for this week, we have that the bias for this week is that GBP USD should be buying. Inflation rates is about 5.2, that's for the dollar. Unemployment rates 3.9, inflation 3.2, interest rate 5.5. Now the commitment of traders, commercials and net shorts in both economies, right? Seasonally, GBP is bearish, right? GBP is bullish rather than dollar is bearish. The yields are all bearish, and of course we are in the risk-on environment. That's it for the dollar. That's it for the GBP USD, and hence why in the GBP USD. Let's go back to the GBP USD charts. Let me back this up with technical analysis. That's why on the daily time frame for this week, we expect the guy to pull back to this discount. So this week, the backing of this technical analysis is that we have to see that pull back to this supply area, hence why we have a bullish week for the GBP USD. On the Euro USD, same thing, we have a bullish week on Euro USD. You can see all the GDP growth rates, unemployment rates, inflation, interest rates, COT, seasonality yields, and global macro sentiment. So for the week, we have a buy on Euro USD. So backing this up with technical analysis, we expect Euro USD to buy to this supply area, right? So we expect Euro USD to buy to this supply or to this premium area. Hence why we are having a bullish week for Euro USD, right? So if you want to get the entry point for this, this rally, you have to sign up for the signal. The signal costs about $100. So once you pay for the signal, you get access to risk management tool, get access to all entry points I'll be having on the 4 hour cycle, because I will have additional entry points like this. This pullback, I'm going to trade this pullback, but my risk on it will be very low. So if you want to participate in this, in all these trades, you have to subscribe to the signals. It costs $100. You have access to a risk management tool. You have access to technical chart analysis. You also have access to this data, this macro data for the week, every week. Every week you have access to this data. All of this for $100. And also you get the entry points, get the stop loss area, you get the take profit area. Everything will be sent to you once you subscribe to the signal. Now, these are things we only share to our clients who have for the market outlook reports. But because the market outlook report is about $1,400 yearly subscription, a lot of people do not really, or a lot of people cannot really afford that $1,400. That's why we'll be able to carve out something which is a signal where we'll be giving you all of this for $100. So that's it for the Euro USD, and that's it for the GBP USD. So let's see what the macro data has for us on pairs like gold, commodities like gold. So for gold, what the macro data is telling us is that short term we are buying short term. Now long term sell. Hence why I'm telling you that I still see on the longer term view. This is I'm talking of for the next 2 quarters. Let me go to the monthly time frame. So that's why I'm telling you that I'm still seeing a bearish decline. But however, technically, this guy is not yet clear. So until it gives us that clear direction, technically, then we can now start shorting. But according to macro is telling us that long term is a sell. All right. So let's just keep that at the back of our mind. Same thing on crude oil. Crude oil, long term, short term is long term is long. So we are looking to buy short term and we're also looking to buy long term. So that's why I'm still telling you, I'm still 90%. I wouldn't say 100%. Let me say 90%. I'm still 90% bullish on oil prices. Hence why I'm still maintaining my call, which is $100 per barrel first level target and $120 per barrel second level target, as long as it trades and sustains above this discount. So I mentioned my criteria for the bullish entry, a bullish engulfing break of structure on the weekly time frame, daily time frame for entries. That's it for the Black Wallstreet Call for this episode. So I hope you got value. This is me stretching myself a lot because I did this section only already, but because it was not recorded, I'm doing it again just to make sure I have this recorded for you guys. I'm really tired already since morning I've been working tired, so I need to end this section here. This is just my commitment to you guys that every time I smile, even if I'm tired, this is just my commitment that in as much as I'm tired, I must continue to share value with you guys. So I hope you got value from from everything you've done today and all the analysis. Make sure that you have this at the back of your mind that December is already ending and liquidity is drying up in the marketplace, and hence you just have to be very careful. Don't show loss sizes around. Forget about the single influencers that are showing loss sizes around and encouraging you just to motivate you to also trivialize, to also trade carelessly and show loss sizes around. It's not advisable. Anytime I come on here, I come here to discuss to you from the standpoint of a professional trader and also speaking to you from the standpoint of a professional portfolio manager. Yes, I manage funds for investors. So I'm telling you this from a place of love. I'm telling you from this state, from a place of experience and professionalism that you shouldn't be trading carelessly, right? You need to make sustainable returns and see Forex as a sustainable investment. So that's it for the Black Wallstreet Call. I'll see you next year when we are having the next section of Black Wallstreet Call. So take care, guys.